Hi guys. So today I just wanted to give a quick analysis on this stock actually ran 20%. It hit it, it hit it hit like what was in 1 minute if you were, I think it hit upper circuit right here today. And what is the stock reacting? Of course anything when there is 20% rise, of course something stock would react to. Uh, what did the stock react to? I will use my cloud skill and this one cloud skill and give you what was that actual um, thing what led to the market rise. By the way, I forgot to post this in my chat yesterday. I have some changes to be done, or I will paste it in the description today. For fundamental analysis, it's absolutely free. There's no BS, anything attached to it. Compared to previous quarter and previous year to year, this is the actual reported. I think this is the actual reported earning. Compared to previous quarter, it did perform very good. It performed very good. Revenue from operation till Q1 FY27 reported good earnings. EBITDA did do good. EBITDA good. This is where my things come here. What does Restaurant Brand India do? It takes it franchises. It's already a franchise setup, and it sub franchises all of its franchisees to other people. And this was there since lot of time. When was this incorporated? When was this incorporated? 2013. And what is around like what 13 years or so? 13 years or so. This was still showing going into derail. 13 years or last 10 quarters is still going derail. EPS is showing signs of improvement, but of course EPS everything matters. Yeah, CFO also, but this is where my comes in. Like if any stock is valuing 20%, uh, mm, if any stock is valuing 20%, there is like there should be something like delivered great profit. The company is doing great, other companies customer is going good. Of course company have got of customer because how big of a restaurant Burger King, Popeyes are in India. But if you look at it, it's not going showing any signs of profitability. And I said stock market is not startup investor. It is like you are showing, you need to show real form of a product. It reached a key weekly support. It reached this key uh, weekly support right here. And you will we may see still what do you call that, FOMO. You may still see this FOMO right here. The stock would continue to rise with this great earning. It presented one quarter, but it is still not showing any sign of profitability. It still didn't shine of profitability. If you look at it, every quarter it did show a great sign of profitability. Like no quarter it has showed profitability, and previous quarter EBITDA is also not showing that much. EBITDA is also not up to the mark. What is it regretting? You always value a business 10 times its EBITDA only, and that is why you are seeing this AI stocks. Like what do I say? uh, Let me refresh it. That is why let's led to this SpaceX crash. You always value a stock in EBITDA. If it's not producing proper EBITDA, proper number, there's no need to be getting this good profitability. And that is what is my main take on this. Why Restaurant India is not a great investment as a key support. I suggest if you want, you should have bought it here. If it is like it's not an investment, it's a trade. You buy great companies. You are responsible for companies' growth, and you are responsible for companies' growth. uh, uh, profit. You own the profit and loss of the company. Similarly to what Growell in India. Growell didn't that present that good of an earning. I still have to do more deeper dive into what Growell didn't present that good of a earnings. It compared to previous quarter, it didn't do quite good. But the company has great business, great revenue model, everything. So that is why I'm still invested in it. But I am sure that this company will grow in the future. We'll see how it does. But restaurant brand India is not showing any signs of profitability. Like from past 10, oh, this one, yeah, from past 10 quarters, not showing any signs of profitability at all. And this is not a great investment to be at all. This is debt to equity ratio. Look at this. My God, 2.73. 2.73. No, one second. Let me cross verify it. 2.73. Yeah, 2.73, increasing debt to equity ratio every year. And you are saying, this conveys me clearly, companies actively dependent on debt to fund their operation. And that is not a good sign at all. Whatever cash from operations it will get, it surely get diminished to pay the interest. So we'll see. And the company doesn't need to take on much loan, to be honest. There are, like, you can get this is just a franchise. It's sub franchises. You are not owning the real estate. You are not owning the, like, goods, anything. The franchises take, sub franchisee take. But what this is taking so much debt is funding the, is like, how much growth, the entire growth depends on debt. So that is my big take. And I predicted it correctly. I warned you about this. I've warned you about this. I've warned you perfectly about this. Yeah, perfectly about this. This crash was imminent. Jane Street manipulation is back, and tomorrow another pump to the market for the 340. That's what I said. I don't like Indian FNOs. If I want to short, I would have shorted cash, but there are no active short players present in cash. So what do? I have to short my crypto as well. Only crypto. That is how I hedge my portfolio. I don't like crypto. Okay, that's why I hedge my portfolio with crypto. So we will see how everything goes. So tomorrow any good earning calendar. Cases good earning calendar tomorrow. No good earning calendar is there. Um, Nothing good company next this week. Pretty good can. All mid caps. All mid caps. Next week is crucial earnings now. Lot of let's next week. I think Marks and reports. VLS reports. We'll see how everything goes. So that's it from me today. So next week, the Bharat Dynamics reports earnings. Bharat Dynamics reports earnings, and no major company, I think. Tata P. Yeah.